Yes, yes, yes. Okay, we're back. We should have sound now on YouTube, man. Let me know. I think I hear sound. Hold on, I'm still on the old one. So, there we go. Okay, I think I hear sound. All right, now we're cooking with grease, man. Sorry, we had a little interruption there. All right, man, what's up? Ben Ad Bob, what's up? What's up? Yes, yes, yes. All right, go back to what I was showing a second ago. Listen to this real quick. Just listen. Hold on.
For investors and the market. Is there such a thing as a best outcome or a worst outcome from these midterms for investors and the market?
Well, Tyler, historically speaking, the third year of the presidency has done well no matter what the results are in the midterm. But specific to your question, divided government post midterms has done the best. We've shown that it's over 13% on average growth, whereas single party control, if that's continued, it's done the worst. It's around 5%, 5 to 10%, depending on which numbers you're using. So that's the normal, but I think we're different.
My man said it's been the worst. Last thing you want is a united government. You don't want one party having total control, man. Because then they get to pass a bunch of regulations and laws and rules. And the one thing the stock market doesn't like is uncertainty. It doesn't like being uncertain. Holy shit, you guys cooked the crypto market. No, you're not too late, man. We just got going. So, had a little bit of a rocking going down in the crypto market today. We got FTX, liquidity problems. It's just a shit show, man. It seems right now to be the shit show that never stops. So it continues to break down, unwind. Eventually there'll be just one. I think all we can do right now is just watch. I picked up a little Bitcoin. I haven't added to any other coins, man. I'm just watching. I don't know that we can trust the custody of the coins anymore. I don't know if we can trust the people. So not something I'm just watching, waiting for the fallout and then new people to emerge and hopefully fix the problems there. Nat Gas, you need this. You'll freeze to death. Especially in Europe, this is natural gas. We've been talking about this for about the last week, trying to put on a trade here. These are longer term trades, right? The way I do them. So we've been trying to get long right around in here, and this is where we find ourselves. We had a big pop, and it actually went into the zone of our first target. And I talked about this, that, if you wanted to sell some, you could. I mean, for me, the RSI is barely getting going. That is a first target, though. It's just too close. I'm more interested in up in here in the next level target and then up into here. So, you could have took some off, and then honestly, I'd be looking to put it back on now. So we see the convergence of the moving averages. Do you see what's happening there? UNG is the ticker. This UNG is the United States Natural Gas Fund. Now, there's a lot of other ways to play this. Now we're not adding to lift, man. Not today, 3-day rule. Anything that drops more than 10% in a single session, you're a fool if you start buying it. FOOL. Just put, and then write your name. Go get a notebook. Go get a Sharpie and just write it on your head. Just write complete dipshit. And then go to work with that on your forehead. If you ever buy on a drop like that from earnings, you got to give it 3 days, man. And then you got to go see. You got to do some due diligence and go see what's up. Why is it dropping? Okay. And then you want to use the technicals, right? So we want it to set up. was, let's go pull up one recently. Let's look at, what was it? I don't know, Facebook. Not Facebook anymore, Jesus. Meta, man. Meta. We want to buy this day? Nope. This one's actually about the same price. This day? Nope. This day? Nope. Went lower, right? So we have a pattern. So what the money flow is it's trying to catch the apex or the center point of where these stages change hands. I just marked this in the money flow book I was going to look at. Stage 1 says accumulation. Price moves sideways and begins at the end of a completion of a downtrend and is the transitional period where sellers begin to lose steam. So what we want to do is be sharks, man. You don't want to bite just because they threw out bait. You want to wait, So we want to have a way to do it where we can repeat it. So we want to wait and we want to let it come in. We just had this with Amazon. I like Amazon. I've been saying that. I like Amazon. But I ain't just paying any old price for Amazon, man. I got a strategy. I mean, what's the point of writing the book if I'm not going to do it? So do I buy Amazon on day 1? Nope. You say it closed higher. It don't matter, man. That's day 1. And then look, it goes lower. This is what happens almost every time. Now, every once in a while, a stock bucks this, and then you're like, oh, I knew I should have. And it's like, whatever. I'm not really overly concerned about outliers or the one big one, there's not just one. It's unlimited. There's plenty of stocks getting hit and knocked down, man. There is no magic stocks. So as this comes down, what I'm waiting for is it to stop dropping. Right there, it stopped. And you say, how do you know? Next day was higher. Now, you can't say that about any of these days because here the next day was lower and then lower and then lower and then lower. And then it stopped and it wasn't lower anymore. So the next thing I'm looking for, okay, it's possibly stopped. Why? Because it's not red. It's not complicated. It's not red. And you're like, how do you know the bottom's in? It's not red. So when we were looking at the 200-day, we were like, how do we know something's undervalued? It's below the yellow line. It's below the yellow line. Like I can just quickly say that. And then now I'm going to go confirm it. But when I look at it, I can see that and say that, right? And wow, look how Amazon hit the 200, went back down. Hit the 200, went back down. Absolutely amazing. So what do you think it could do over here? You think it could hit the 200? Probably could. So what am I looking for? The bottom, man. So it finally had a day where it didn't go down, and the next day held that day, and then today's holding that day. And today is a doji reversal candle. My God, man. So look at that. Today, right now, is a doji reversal candle. And if we look at where price closed here, we now have 1 day, 2 day, 3 day, 4 candles with price holding the low of the day before the anchor point. Meaning if we're just looking at closes, that's the ticks to the right. There's a red one down there. And then look. 1, 2, 3, 4. The ticker, sir, is Amazon. So as we watch this, I got a box forming, which I would say is, oh, come on back, man. I would say is this. That price had come down and then it stopped. How do you know it stopped? It's not red. Man, what a simple definition. You're like, how do you know it's the bottom? It's not red. So that's the bottom. It stopped. Like, what if life was that simple? How do you know you're going? I'm walking. Where are you going? That way. See what I'm saying? So pretty simple. So try to simplify this, man. What is the definition of something stopped dropping? It stopped. Now you might say, well, what about, wait, no, talking about right now. It stopped. It stopped. It's not going down anymore. And we have this indicator called the MACD, which stands for Moving Average Convergence Divergence, right? Created by Charles, Gerald Appel, man. Come on, G. What page? Page 70 in the money flow. I ain't looked at this in a minute, so let's look at this for a second. Ooh, got my pages right? All right, page 70. Oh, I got the TSI first. Hold on. Developed by Gerald Appel in the late 70s, the moving average convergence oscillator is one of the simplest and most effective momentum indicators available. The MACD turns two trend following indicators, the moving averages. I don't have them on here, but they look like this. I don't use them. I just use the bars. Turns two trend following indicators, moving averages, into a momentum oscillator by subtracting the longer moving average from the shorter, the bigger from the smaller. Keep it simple. As a result, MACD offers the best of both worlds, trend following and momentum. Now you say, what do you mean momentum? Right here. Now when it's talking trend following, it's talking about the crossovers. Now this is not MACD up here, this is TSI. Let me show you what I mean. Some of you are confused. I can feel it. I can feel it come. Let's see. Let's do the MACD. Right there. I'm going to add an extra one for just a second. Notice this is what most of your MACDs will look like. You got this, and then you got this. Now, mine don't look like that because I can see it in my fucking head. I don't need it. You guys need it. I see it when I look at the chart. I don't need no crossover. You need a crossover because you don't look at charts enough. I know you're busy, a lot going on. So if you plot the crossovers, let's see. I'm going to show you something about them, man. These are the crossovers, right? Where's it at? Right there. Where's the next one? Right there. Now, when it talks about it's a trend following indicator, it's talking about this. From here to here, a lot of times, not every time, but a lot of times it catches the move, man. And so that, but I don't need that. I can see that looking at the chart. We don't need that line there, this crossover line. Look up here. So when all that shows, so the histogram shows you all of that without the complication of having two things to look at, right? It started to cross here, and then what? Look, started across here, but it didn't. And then what? When it crossed here, guess what? It crossed the center line here. So if I have this visual, I don't even need those lines, man. I got the 20 and I got all that. I don't need those extra things in my way, man. All I need is a histogram. So the histogram is a visual representation of those two lines. The moving convergence, it's subtracting the bigger from the smaller, man. That's what it's saying. So every day it's calculating. Fractals are infinite complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over again in an ongoing feedback loop. This is the ongoing feedback loop. So every day, as this data comes in, now it's at 9034, and then it'll be 9035. As that shit's coming in, once we get a candle, all this recalculates, man. Behind all of these is a math formula. You can go calculate. You could do it by hand and then hand draw the MACD on there. You could do that if you wanted to. So I don't need the lines. I know where it's MACD's converging and diverging. Nothing wrong with having the lines. I'm just trying to explain to you why mine might look different in the way I'm using it. So what I'm more concerned with is not the crossover, which is that's what's happening right here. It's the momentum of the moving average convergence. Is it converging or is it diverging? What is it doing, man? Whoa. Incoming. So check out the box. It's holding right now on Amazon. I'd be a buyer here, man. I'd be a buyer here. I did buy here earlier. I texted earlier this morning. Moving averages, somebody said the moving averages are too far apart. Yes, they are. So we got to define what we're doing. If I'm trying to buy the lowest point in a buy and hold account, this is it. And yes, it is way away. So it's probably going to take a minute before this runs. This breakout could be a ways, right? If you look over here, when it's coming down at the lowest low, these averages are going to be pretty far apart, man. And so what I'm trying to find is the pivot point. And the pivot point's easy to find because it stops going down. Like, oh, that's complicated. So if we looked and I said, man, here they come again. Incoming. What if we looked at lift? Is lift stop going down? Nope. Nope. My man said, if you want to take a shot here, just place a stop. That depends. Depends on what the plan is. If I'm an accumulator of Amazon, why would I have a stop? I don't want to sell it. I want to buy it. And if I want to accumulate Amazon, then I want to use trading skills to try to buy the absolute bottom, just like a trader would. Now, if I'm trading momentum, because I put this in as a possibility for a short-term trade, if you remember, and I said, hey, you might look at this. This is Amazon. We were talking about short-term trading. So if I'm trying to build a fast money trade, a short money trade, a momentum trade, like he said, I'm going to find this bottom. I'm going to put my stop a little. This is the 1.X on Amazon. This is the AMZU. It's 1.5 Amazon. It only costs $14 and it trades at 1.5 times. So you're leveraged. Whatever Amazon does. They got it for Google, got it for a bunch of them. And you got $14, right? Or are you so broke you don't have $14? You're like, I don't have $14. I don't know how I could ever trade. It's like, of course not. So when your friends go, oh man, I don't have money for trading, go, you don't have $14? So, a guy could buy 3 shares. And what's our plan? We're going to try to unload them, right? So we're going to look at the money flow pattern. And we're like, all right, where are we at on this pattern? Well, I think we're right here. I really do. So on the daily, I really think we just put in a bottom. It's probably the apex. The MACD is saying that the momentum to the downside has stopped. And you're like, what do you mean? Meaning it's stopped. Look, it's ticking the other way now. It's ticking the other way. It's like, I don't know it's going up, but I know when it stops. And this is stopped. It stopped going down. So it stopped. And I don't know if it's going to go up or down, but if I want to trade this, I now have a tradable zone, right? So if I want to do a short-term trade, I could have a stop there. And your target may only be right here, man, previous high. That's the money flow, right? So if you draw it out, that's the money flow. And on right here is this side. So as I'm, oh man, what did you do, Gerald? As I'm looking at this, it's like down, sideways, and I'm trying to be right there. Boom, put a stop. Because if it's not this and it goes lower, I want out, man, because I'm trading that it's this. And so it either goes up or I want out. That's how you can do a trade. Now, if you're like, oh, I can't click the sell button, then don't trade like that. If it goes down. So back up your trading. So if we want to trade short on this, though, okay, I think stage 1's in. All right, cool. Drop to a 1-hour chart. Now what? Now we're going to try to jump it, man. Do we see the pattern here at all? It's like, well, let's back it up. Now, you know what? Let's do Amazon because this is the leverage one. It's not going to have the volume the other one. It's going to look weird. Okay, see how that looks better? There's volume here. But guess what? You might not have 90 bucks. You're like, I don't have 90 bucks. My mom didn't give me 90 bucks. My wife said I can't trade with 90 bucks. So I can't do it, Gerald. I can't possibly buy one share. So that's how you would learn to trade, guys, without going broke. And I try to tell people this. Someone, Diane mentioned this in Discord the other night. She's saying, hey, I've been here 2 years and I finally get what you're saying, that it takes about 2 years just to get the nuances of trading, to internalize it. Like, I don't believe for a second you can read my book, come jump in, and you're just going to have it. You're going to shit the bed. You're going to lose money. You're going to fuck it up. You're going to do things I tell you not to do. Or you're going to go in 3 trades with me. You're going to skip 3, and the 3 you skip are going to be the big winners. And then, someone else will be net positive. You're not. That's what happens, man, because there's a lot of moving parts to all of this, man. But look at this on a 1 hour chart. When we take what's happening on the daily, where's price, man? If this right here was a day chart, where do you think it's going if you're inside the money flow? Well, we'd say, okay, there was a box here, and this was the stage 3 here. And then we had a stage 4 decline. It tried to do a stage 1, broke, kept going down for another. And then what? Now we're going, and it could break and go for another. That's the uncertainty of trading, right? But if it rips up out of this, what? That's a breakout. If we break out on the 1 hour, so this is a 1 hour chart. If we go back to the daily, oh, what the hell is this? I just accidentally hit the wrong thing. E? My God, this thing money flows, man. Look at this. Wow. While we're looking at this and we're talking short-term trading, this is what gets most people messed up, is in here. That's a big down move. And if you catch the stage 1, this stock is called E. I don't even know what the fuck it is. It runs up. You look where it stopped, right at that other box right there. Isn't that crazy? Turns down, puts in what? Look at this bottom. It's just a random stock I grabbed. What does the bottom look like? Down, down, down till what? Till it's not. And then what? It does a little box pattern. The MACD ticks up. And then what? We run. It breaks out. And then it just runs. I don't even know what this is. It's ticker E. I'd be selling it, though, if I was trading. Let's get out of that shit. So Amazon on a daily, this is a 1 hour chart, 90-60. If we go to the daily chart, you see how that stage is only 4 bars right now? So what you're seeing, remember, it's fractal. Fractals never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. In other words, the money flow is a fractal pattern. It's a fractal pattern. So this here, and you're like, yeah, but does that work on a one? Does it work with options, Gerald? Yeah. So if we go to the hourly, do we see a stage being built? Yeah. See price breaking out above the 20. So we're seeing the money flow play out. But as you back it up like that, you can see what's all the chaos that's going inside of those 4 bars, man. Look at all this chaos. Hours of up and down and up and down. And what do we got? We got the indicators turning up. A little bit of momentum tick down here. But price hasn't broke out yet, man. So if it ripped, I would easily expect it to come up into here. Why? That's a little previous zone, right? So if I'm short-term trading, my targets are on this 1 hour chart. So as I look at Amazon, that's what I'm looking at right now. Now, does it break out? I don't know. It looks like it's breaking out to me. I added today. We see it trying to do it right now on the 1 hour chart. And we got an upside prediction much higher. And so we got technicals in line with fundamentals, in line with the possibility for a bounce in the Qs right now. Price has been very volatile. So we're going into the close, man. Let's grab some Amazon. Qs are trying to get back above the 20, man. That's good. I think they shook out a lot of people this morning. Now, back to our Nat Gas trade. I'm long Nat Gas. Someone asked me in Discord, are we closing it? And I said, patience, grasshopper. No, we're still in the same stage, man. This is where you're going to add to it, man. We're still playing this same thing. Yeah, it popped up, popped back, whatever. You know, and if we were trading super tight, yeah, that's a target. You could have took it down. I'm just trading for a bigger zone. And if it comes down into here, as long as it stays up into here, fuck, man, I can build this up, man. I'm still trading for 31. You know, if it breaks, you know, then we'll talk about it. You know, if this breaks, because this was the low over here too, you know, would it be crazy if price went here and then back up here? No, that looks like the movement of natural gas. Now, if we want to play that tight, you got to come off the daily and go down to a 1 hour. But look what happens when you try to play this on a 1 hour. I mean, Jesus, dude. In 1 hour, it can drop below it and then turn right around and be above it and then come below it and be above it. So, you know, that's money flowing, but man, it's super tight. Super tight. Daily's fine for me. Well, fuck, man. Let's take it down. Wow. Look at this 15-minute here. But Gerald, does it work on a different time frames? Let's see. I'm from Alabama. Does it work on different time frames? Does it work with options? Let's see. Man, that looks a lot like that. A guy asked me yesterday, he said, hey man, does this work with options? And I said, yeah, it works with options. And he goes, it works with binary options? I was like, yeah, it works with binary options too, bro. Now that's some serious crazy shit right there. You got 1 day for your trade. You better pick the right direction. And at the end of the day, it's over, man. So, yes, it would work for binary options. So we would just break the time frame down. Now, to accommodate, depending on the asset, depending on the movement of price here, you may have to play with these time frames. Like some shit, like, you know, you get trying to trade utilities on a 5-minute chart, that ain't working. But, you know, you could trade Bitcoin on a 5-minute chart, or you could trade the Qs on a 5-minute chart. You know, some things you can trade on it. They got enough liquidity, right? You could do that. I don't, but I'm just saying price moves, you know, as we look at this 15-minute chart here of the Qs, we had a big breakout, right? Each one of these bars is 15 minutes. And then, just for giggles, look at this. You know, we had a little bit of it, and then it broke out again. It just never went down, right? Like this trade just kept rolling. But, you know, I'm trading. I'm doing the money flow thing still. Like, I'm not looking to get out of a 15-minute trade if everything's on this side of the green line and it's just moving on up, man. I expected it to stop there. It stopped there before. Man, it's the same thing. I just showed it on a 15-minute of the QQQ, man. The patterns that I'm looking for is the same. So if I'm trading on a 15-minute and this thing pulls back, I'm like, you go, how do you know where the bottom is, Gerald? It stops dropping. And the very first second it stops and the next bar doesn't go below it, hello, you got the bottom. Now, we need a little bit more to confirm that, but that's the bottom, right? And I'm looking for the thing to, and like everything starts to turn, and you're like, and I buy it, and then 35 minutes later, we're right here, we're working toward a breakout. Where would my target be? Previous high? And so the pattern, and I don't trade like this, but I used to, but I'm not sitting around on this. And there's some little changes you got to make to some things based on liquidity and the movement of price. And some shit you can't day trade or short-term trade like that. Some things fluid, it flows. The SPX, like the S&P, all of that stuff trades easily like that, man. But you get into like oil or gold or, you know, nat gas, you're going to run into problems trying to do it. At least I always did. And boom, we got it down. Here we are on a 15-minute chart, man. So what I used to do in my younger days, I would go to the daily on the cues and I'd be like, what direction do you think we're going? And I would figure it out with the money flow. And I'd say, okay. And then I want to take day trades in that direction. So we got our down. And so I'm just big picture looking at it. And I'm like, okay, it's starting to go sideways. It went to breakout. So in all of this, I'm trying to take trades to the upside because it's in a stage 2 breakout. So when I zoom down, I'm not trying to fade this because it hasn't broke down yet. You get what I'm saying? Meaning I'm trying to take trades in the direction of what I believe to be the trend. I'm not trying to fade the trend. And so what that meant is sometimes I just got to sit on my hands because the like over here, the daily could be saying we're breaking out. But when you get right in on this bar here on a 15-minute chart, this could give you the impression that the market is really going down. And it's like, no, it is on your chart because every bar is 15 minutes and not an hour. And so it's moving it 5 times. And so it can give you, and so if you can't separate that in your brain as you go from time frame to time frame, you know, so if the shorter you want to trade on your time frame, that's good, but be able to compartmentalize it across time frame continuum. That's what a guy said to me last night. He said the TTC. And I said, what the hell is a TTC? Is that an indicator? And he goes, no, man. It's TFC. And I was like, what the hell is TFC? And he has an indicator like TSI. And he goes, no, time frame continuum. And he was talking about that, the time frame continuum. And being able to see that in your head, man. So we're at 269. This is stage 1, trying to go into a breakout. It was a breakout that's pulled back, but it's held this. So I'm still with the girl that I came with. So I'm assuming we're going higher. And that's where I'd be looking to trade this, is to the upside, because we're not in a stage 4 decline. So I'd come over here if I was if I was trading on the quick, you know, then we would have rode this up. I'm out. Am I shorting this? No, I'm not shorting it, man. I'm just not in it. So I would have been trying to look for long plays and then disregarding the short ones. You're like, but what if it keeps going? No, it'll relax and come together, and then a new direction will be formed, and then we would start taking them to that direction. And so during the crossover, there's going to be a moment where you're like not in tune. And you're like, oh, what the hell is happening? Stop and ask yourself, where direction is the market going? And so, you know, that's the way I would do it. I don't want to fade this. I want to ride as many of these as I can. And if I can avoid a lot of these as a short-term trader and just catch another one, and then what if I catch 3 of those, man? What if I catch them right and I scale out on the RSI, and then when it goes, I'm out, man. I'm out. And then I'm what? I'm waiting for the next stage 1 setup, man. I'm putting in my stop. Or you could wait totally for the breakout if you wanted. I like playing stage 1s, but you don't have to. You could totally wait for the breakout, man. Oh, man. Let's see. Somebody on YouTube said I could find my love there. Let's see. Time frame continuity. Yeah, I never always just referred to it as time frame alignment, but what do I know? I'm from Texas. I keep it simple. It's a flux capacitor. Important concept to understand about the moving average. The moving average is a lagging indicator, meaning it's working off past performance. In this ongoing feedback loop, we're getting more and more information. Someone said, how much is Discord? Man, that's not where we're starting, man. I feel like you just met me at a bar and you said, Gerald, you sure look pretty. How much to take you home? I would think that's rude. I'm not so easily for sale, sir. You got to get my book, man. Yeah, so you got to get the book, man. You got to get the book, man. I don't know, man. You might be some kind of freak, man. You could just roll up in our Discord. Next thing I know, Discord's taken over by furries or something. Matter of fact, probably gonna need you guys need to pick out furry costumes. My next meetup, we're gonna wear costumes. Let's see. And we'll bring in another influencer and make them pick out a furry costume too. And they're not gonna want to do that. And then when they show up, they won't do it. That's what we'll do to the professor. We'll do a live event. We'll all agree secretly to wear furry costumes, but whoever the other influencer I invite won't be wearing one. Oh, that's funny. I would think that was funny. You guys might not enjoy it as much as I would, but I think that'd be hilarious. Back to what you're saying, time frame continuum. That's the concept there where, and I'm just trying to, what I've been trying to do lately, if you haven't noticed, like, really digging into what does it mean to be a fractal pattern? What does that mean in this ongoing feedback loop? What is this platform you're trading? Can't find it. They are created by repeating a simple process over and over again in an ongoing feedback loop. Driven by recursion, fractals. This is fractal. Remember we said we can do this on multiple levels. We're looking for the money flow on multiple levels. This is a 15-minute chart of the QQQ. Now, I don't trade on this, so relax. But let's take it to a 1 hour. And what do you see happening on the 1 hour? If we traded the money flow pattern on this, and we're always trading, they say past performance is not indicative of future results. Man, did I not pin my... What is wrong with me, man? There we go. Pinned a message. Disney misses on profit, so down goes Disney, I'm guessing. Look at the QQQ on a 1 hour. So time frame continuum, right? Or time frame alignment, time frame, whatever you want to call it. We can look at, say, the daily, and from the daily we go to the hourly, and from the hourly we could drop down one more, and you could try to line up 3. So you could try to say, okay, I'm trying to catch the bottom on the daily. I'm just waiting for the stage 1 to start. When the stage 1 appears to have started, you're going to see a whole bunch more bars on the lower time frame, right? And what am I looking for? If I think that's forming, then I'm going to start looking for breakouts, right? And if I'm a short-term trader, then I might have these short targets. I don't know how short you want to go. Maybe you like it really short. Let's see. Maybe you're like, man, take it all the way down. Let's do 5 minutes, right? And then so these moves would be more exaggerated. So what we've seen today in the Qs, you know, how it went up and then our accounts were green and then it kind of turned. You're like, man, someone must have tweeted or something. You know, and we see what? We see it come down and then turn around and run back up. But these moves look big on here, right? But these aren't big moves, man. And what do you see there? Sideways up, right? Sideways down, up. And so that pattern, you know, will it be perfect on every time frame? No. It's just the general concept that time times amount times yield, but time inside of the stock market is completely fractal. And so if you can line up these times with your goals, and you're like, well, what's your goals? What are your goals? Oh, by the way, notice what happens with the 200 here. It's pretty wild. Let's see. Hold on. All right, that's the cues. Let's take this down. Back down to a daily. And we see it push up. Didn't quite get there. Tried to, held it. It's still holding it. We're still in a stage 1 on the cues. So I'd be looking for a breakout. The problem is it's lagging the major indexes, right? We had the SPY. At least the SPY was green today. The SPY was green today. And the DIA, the Dow Jones Industrial Average, continues to outperform, right? And we need to know that. You need to be able to say, because if you're going to be a trader, you need to know which index is rocking. Oh, you didn't know that. This is really important, man. I'm always shocked about how many new short-term traders I meet who are struggling with that. But if I'm short-term trading, you don't get to pick the sector, man. The sector picks you based on movement of price. So my game plan for this week was this right here. But if we're short-term trading momentum, we got to trade what's moving. And what's moving are Dow stocks, man. DIA, number 1. So as I'm looking at this, I know where's the big movement going to come from? Well, the Dow's the leader. What's number 2? I had oil. Now that could be changing up today. We saw oil pulling back. Here's the weird thing is we got oil, it's still trending up, still above the 20, still in a stage 2. And the reason I gave it the edge is when we look at energy stocks, look at this. The stocks are outperforming the commodity, and that's what should happen. It should happen in gold. It should happen in crypto. It should happen in everything. The stock should outperform, meaning you can make more money selling tomato sauce than you make growing tomatoes. They take the tomatoes, they leverage it by putting it in cans, and they distribute it, and they make a profit. Meaning you make more on the commodity by converting the commodity into a product. So oil stocks will do better than oil. It's the way it should work, man. And so, but the commodity itself is going to have a huge impact. So, but if the market's moving higher and the commodity's moving higher, then it's just easy for that stock to just continue to drift up and up and up. So the number 2 for the Dow, behind the Dow, is oil stocks based on the XLE the oil stocks themselves, and just oil has done pretty well. Number 3 was the SPY. Number 4, metals. And you were like, what metals? So remember, we've been building this silver trade. Let's look at the SLV. I'm trading the AGQ. Look what it did. That's our target, man. So if we go to the AGQ, 200 days, our first target, it's not quite there. I should have sold some of this at the open, into the close. Looks like I slipped up on that. Let's see. So on silver, You say, why did you buy silver? I don't know. I can't value silver. The reason I bought silver, it was so below the 200-day moving average. So we've just been accumulating it. Actually bought some over here too, to be honest, on these stage ones. Now, let me ask you, are you going to want to buy these when you started over here? You might not. So maybe you got stopped out on that one. Let's say you get stopped out on that one, and then you're like, oh, I don't know if I want to get back in. That kind of hurt. And then you get back in, and it comes down again, and then it starts to run, right? But then it comes back down again, you know? So if you look at, but if you were to take this, all this movement of silver and you dropped it down the time frame like we just did, it's not, you know, this is building this giant stage one here. But if you drop it down, let's look at it on a 1 hourly. You know, the moves are much bigger. The problem with trying to do silver on these is it's a commodity. Anytime you get the commodity, you see these massive gaps. That's because the market's still trading when Wall Street's closed. You know, so on the futures exchange, you had a breakout right here. And then when it opens for us, it's already moved way up here, man. So, you know, to really trade commodities, you really need to trade them on the futures exchange, or just back up your time frame a little bit. And then it, you know, it ain't that bad. It can still gap, but it's not that bad. So, you know, my whole justification for trying to build a silver position was just because we're trading below the 200. You know, when gas and oil and that, do I even have it on here? Yeah, right here. So we've been building this silver position for a minute. Let's go back and check the chart here. You start adding recently. Okay. At least on 9/7, we were talking about building. Oh no, we keep going. Okay. So this latest trade was started on 8/5, new swing trade in silver. Well, let's see, where were we in 8/5, man? Eight five. So we're buying on the breakout here. Same target, 200 day. So that's a position trade, meaning when it goes into a stage 4 decline, you could get out. But what I'm attempting to do is to build it up on these stage ones for a bigger payday. So that was a game plan. So far, so good. It's working. My man says, I miss the old GP who would have been going on and on about needing to get warmed up before. Yeah, man. Let's see. Gaps get filled. Yeah, but hey, be careful with that gaps get filled shit when it comes to commodities. They have a market. This shit's already trading somewhere. So when you see that gap there, that's not necessarily a gap, man. If you go look at a futures chart, that shit runs at night, and there you go. You just see it moving up. And then when we open, it opens here because this thing opens on the regular hours of the stock market. So there was no gap. It was, you know, we're just getting the data at, you know, in a 6-hour period in a market that trades around the world 24 fucking hours a day, you know? And so there's gaps there. But like all good Americans, we like to take our weekends off, holidays off. Let's see. That's about it, man. Market's closed. I think we're all right. Any pops you're going to see out of, you know, if the Republicans sweep, it ain't going to avert no recessions. We're going to get a little pop, and that's it. So Nat Gas holds the 20. I would be adding to the position here. And if I wasn't in Nat Gas, I would be like, oh, shit, it's given me a chance to get in it now, because that is the crossover that I look for. It's not infallible, but it typically lets me know there is a trend change in direction. It's one of the 6 things that GP looks at that I think are important, because they tend to connect. That's where I assume. I don't know. I don't have any other way of knowing. And then when I assume it does that, I assume it goes to where it stopped before, right? And I'm not looking for this one. That wasn't a big enough payday for me on Nat Gas. Now, you could have on silver when it banged the 200, but here I'm really hoping that goes further than that. So that's what I'm playing. Yeah, plug is another one setting up with a good money flow pattern, by the way. Sure, I appreciate you appreciating it, bro. Yeah, man, you guys be good. That's all I got today. I would have added to Nat Gas. I didn't add. I'm just saying you could have. And if I wasn't in it and I wanted to get in it, that would be a signal for me to get in. Now, if it is breaking down, then cool. At least I didn't buy it up here. I mean, I'll get stopped out quicker. But I'm playing in this stage 1 zone, so probably playing at it. Now, if we break it and get down here, that's a different conversation. I don't know that I want to own Nat Gas going in there, and that's part of the risk of trading, right? Part of the risk of trading. My man says gaps. They always get filled, right, Gerald? No, sir, they don't. But it is a general principle that gaps on charts get filled, but it's not science. It's not. You didn't join fucking Scientology. It's just you see that gap right there. See that gap? It needs to get filled. And look what happened. It did it. It opened, came down, filled the gap, came back up. So whenever you see gaps, look, there's a gap. What happened the next day? Came up, filled the gap. But Gerald, what about this gap right here? Kept going, came back, filled the gap. You can't mean it fills all the gaps. There's a gap, came back up, filled the gap. But what about this one right here? All right, it ain't been filled yet, but gaps get filled. Every once in a while, you'll find one left unfilled. Now, this is. I don't think you can necessarily say that all the time for commodities for the reasons I explained. But let's look at something like Facebook real quick. No, let's look at. Now, let's see. What about this one? Now, some gaps ain't going to get filled. I mean, the company's fucked up. But a lot of times they do. And remember, it's not perfect. It's not perfect. Right? So if we drew a line on the low of that gap, what's price got to do to fill it? Now, let me show you something, man. That's why all these people that buy these big-ass breakouts like that, I'm all right. You do that because it's coming right back. And you're like, what do you mean? It's got to fill the gap, man. Came right there, filled the gap. Look at that. Now we can head on up. So that happens a lot. It's a very common, it's one of those things like a doji reversal candle. They tend to be right a lot. It's like that. Let me see. We almost had a doji reversal on Amazon and we didn't get it. So filling gaps is a legit thing. There are trading strategies based on that. I'm not that damn concerned about it. Real quick before I go, $100 lesson. I said it to a guy once. I said, hey man, you want to know a secret money-making formula? And he said, yeah. I said, I'm going to tell you, but you're not going to understand anything I say. And I said, look for doji reversal candles when the RSI is in extreme levels. When you get those reversal candles, price tends to turn. You know, not 100%, but I'm only trusting the ones, meaning, and what I'll use that for, let's say I get a perfect one. Let's say that today was like perfect right here. I mean, to me, that would be a big ass red flag, because I look up and like RSI is extreme, prices come down, it stopped, it put in a reversal candle. I look over here and the MACD's turn. That's all I need. If I'm short-term trading, that's all I need. Things are aligning. That's trading, right? And then you'll get it pop. And when it pops, if I'm trading that, if that was the plan, I'm trading a reversal candle, it pops, starts to move, I take the shit off. There, it's done. I go look for another one. And there's whole strategies based on that. And you don't have to trade that. If you're just aware of it, they're going to come to you, man. If you're following 60, 70 charts, you don't need to go look for them. You can come over here and run a filter for them if you want. But it's not necessary. If you just follow about 100 stocks, you're going to start to see that phenomena. Anyway, man, we covered a lot there. Fill the gaps, reversal things, how to spot bottoms. I wasn't even supposed to talk about. I was going to talk about moving averages, man. You got me all off track. Peace. Oh. All right, YouTube. We're going to disregard this, man.